Hey traders, I want to show you how to get one tick data, the tick data, on minute bars. We can finally do it, and I'm going to show you how it's done. Alright, so let's pull up a tick chart. I want you to notice on a tick chart that this is all the data we have. There's no more. And typically on the ES, ThinkOrSwim really only gives us about 2 hours of tick data to do anything with. But we're going to use it. I'm going to show you how. All right, let's open this up, and I'm going to open up the tape volume. This is the tool I have built to make this happen. Ever since day one in trading, I have been bugged that I can't do this, and I have had people ask me, and I worked really hard to figure it out, and we finally got around the walls that they put up for us. So you can see what's happening here is it's building the 1 minute chart right off of the tick data here. And it's putting it into a subgraph, separate graph, independent of the data that ThinkOrSwim offers. So what we do now is just hide ThinkOrSwim's data. Show this here, get rid of these markings, scoot this over to 10, make sure futures is on 24 hours. Look at that, we got 1 minute chart, and we are able to read the tick data on a ThinkOrSwim. All right, now I like 1 minute bars. You know what I like more is volume bars. And I like about 500 volume per bar on the ES. There it is. So now we got 500 volume bars, and we're able to read the tick by tick data and do awesome tape reading analysis on it. So I want to show you the programs that we have, well, that I've built into this program. So the first algorithm here, well, first you can have two. Yeah, you can compare two. So we're going to do two at a time. So we'll do order accumulation, and then I want to show you the volume momentum. All right, so order accumulation. It takes the awesome concept that I think is great of multi-time frame RSI. You probably know traders who do it. Or multi-time frame CI, and there's other ones. This one I use the RSI on every tick, and it takes a multi-time frame version of it and looks for times when that strategy says go up or down. So when this is rising here, you see how it's rising? That tells you the multi-time frame RSI says prices should rise. That's what's being calculated here. It's not actually price. This is accumulating a positive number or a negative number based on the RSI analysis. Pretty cool. So when it's going down here, it's saying price should go down. And you look for divergences, and that's true for almost every tape reader you'll find anywhere from anyone. So all I'm doing is looking for that RSI indication. The second one here is the volume momentum. The idea of momentum is to say that if volume moves in a direction over a while, it's going to want to try and continue in that direction. And the way all traders measure momentum is some variation of two moving averages, the difference between them. So that's what this is doing. It's looking at volume with two moving averages and saying, well, if volume continues in this direction, it should continue. It's pretty simple. Let's take a look at the next two. Cash flow and supply and demand. Technically speaking, cash flow is one of the most complex analyses in the toolbox here. What it does, I'll talk about this one first, is it takes every single tick and looks at the volume and decides if that tick is weighting price down or weighting price up. And if the volume is putting pressure on price to break lower on a tick-by-tick basis, then you get a lower number. So what I mean by cash flow is that the money coming into the market is pressuring or attempting to flow in a direction. So you can see right here as this falls down, you see how it's going down? This isn't because price was moving down, this is because volume was pressuring price to move down. And so you'll see that volume will sort of put pressure on price near lows and highs, and that's a really good indication that volume is starting to trade in a different direction. I really like cash flow. It it's one of the ones that I'm pretty proud of because it's pretty complicated, but it works really well. The next one is supply and demand. And the idea behind this one's that demand is where price can't trade in a certain area for very long, and it can't fill very much volume there. It just can't stick around. And supply is the idea that it fills a lot of volume and then fails. So that's what we're looking at a tick-by-tick basis. Supply and demand is a longer-term concept. So I use this one and sort of think in like an hour instead of little tiny divergences. I'll think, how has this been trading over the day? And you see moves like this throughout the day, but I tend to think of supply and demand over a little bit longer term. Auction cycles can last hours to weeks, so this is one that you'll want to step back if you use it. The next two algorithms I want to show you are two of my favorite: transaction sentiments and market orders. If you follow me at all, you've heard me talk about these two because I really like them. Now, what transaction sentiment is it's taking a look at all the transactions and deciding if they're a buy or if they're a sell. And then if it's a buy, how is price responding to buying? So I'm calling it sentiment because if the market likes the buying, it'll give buyers a better price on the tick level. So let's find an example here. So right here, what was happening was, it's still loading. Kill somebody. So let's find an example. So right here, we have selling coming into the market and prices rising. So this is not going down because of the selling. This is going down because there is selling coming into the market and prices are getting better for sellers. So the sentiment is supportive of the downside. And so this is transaction sentiment. It's how the market is responding to trading. And you see how this rises here? You can't see it because the ticks are too inside the bars and they're small, but the exact same thing is happening. There is buying coming in and buyers keep getting better prices to buy at. So it's rising. And that's what you're seeing when you see transaction sentiment go up or down. It's the supportiveness of the market, the price, actual price to trading in a direction. Market orders, what it does is it looks at all the prices and it sets up where only a market order could be filled. And it accumulates whether the market order is up or down. So what I really like about market orders is it doesn't tend to so much show really great divergences all the time. It's that you get to watch people get stopped out. And it works pretty well. We've all been in a situation like this where you see the market move pretty aggressively. You're excited about it. It pulls back a little bit and starts to move again, and so you shorted it, and you can see that's exactly what people did. They clicked the sell button in excitement for this second leg, and instantly they got stopped out, and that's what this is showing you right here. And that's one of my favorite things to track, is to see how much price chasing is going on. Markets like to bottom out when huge sell orders make the wrong decision at the low, or it's people getting stopped out. That's a market order. So this does a really great job of giving you a good idea of the character of how people are trading. And if you've been trading long enough, you'll watch this and just nod your head. I've been there. So I love putting these two together. It tells you how price is responding to orders, and it tells you how people are actually trading. The next two I want to show you are order speed and price inertia. So order speed is a pretty simple concept. It basically says if the market is showing that it's a buy and the buy is fast, then it's weighted more heavily than a slow sell. And it takes the difference between the buying speed and the selling speed, and it finds the difference between the two. So what's happening right here, as this moves down on the order speed, while it's still loading, but as it moves down, what you're seeing is either the short side is getting faster or the long side is getting very slow. It just shows you the price disparity, or the speed disparity between those orders. And the concept is that if you really want to get in on one side, you get in quickly. And if you don't want to get on the other side, you sort of take your time, move your order out of the way, take your time. So you can see people were more anxious to get in long than they were short until about here. So you could think of that as sort of urgency. The last one is price inertia, and this is one of my favorite tape reading algorithms. What it does is it looks at how difficult it is for volume to move price up or down. And then it says if they're not the same, so like it takes 100 contracts to push price up, it should take 100 to push it back down. But what ends up happening is that it might take 10 to push it up and 100 to push it down. So then price sort of drifts up. And it's price inertia because it's not based on momentum. It's based on that it's easier to move up, so price suddenly has this instantaneous momentum, which is inertia. And it's being pulled for some other reason than volume. And so what this is showing you right here when this moves down is that suddenly the downside got easier than the upside. It was more difficult to buy and push it up, and take profits than it was to move down. So the downside won't be very hard for somebody to just market order it down because it's getting significantly easier. This one is an excellent tool for divergences, and it does a great job of timing trades, especially in the middle of the day. Today was a very high volatility day, and it did an excellent job. The more volatility means the more data I get to analyze, and the interesting thing about these indicators is that the more information that you have, the better they are. And that's actually true for all indicators, but these especially. So they get a lot of information, you start getting really accurate information, and trades just work really well. So if you're a coder and you want to build these on your own, go ahead and send me a message. I'll talk to you about it. The reason I sell the codes is because they were a lot of work. And so I'm selling the work that I've put into these codes to make tools. And I'd like to share them with people, but I can't give them away because they were just a lot of work. And so if people are willing to do the work themselves and learn how to do it, it's a lot of work. Go ahead and shoot me a message at BaconTrading@gmail.com, and I'll help you out if I can. Otherwise, ask me questions about the indicator. Come follow me on Twitter at PipSinger, or check out my webpage, BaconTrading.com. There are live charts, and I have this chart up every day, the ES. And overnight, I usually have up oil and gold right now until somebody complains and wants to see something else, but nobody's complained, so I think everybody really likes it. So thanks for stopping by, and I hope to hear from you.